Good evening, folks. This is Andy Peraza with Special Effects Academy. We are on the start of the week session in the Forex trading room for June 28th of 2020. We'll be going through our regular agenda, a look at the prior week's results, our currency strength meter, fundamental announcements scheduled for the week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the ledger screen is the long-term ledger. No change. One trade we had open at the start of the week remains open. It is slightly negative right now, but not dangerously so. We'll look at that chart with the Aussie CAD and I'll give my informed opinion, but for now, this trade is a keeper. We'll be keeping it on the books for an undetermined time. Again, it's the long-term account. The profit balance is close to 15%. It was a little over 15% last week. The difference is made up in swap cost. Any trade remaining open every day does incur a small cost in swap fees. Intermediate term ledger is down for the week, another few percentage points. And again, the market has been flat and bouncy. We did not catch a break this week. Four trades did close against us. One trade remains open, Kiwi dollar. It is carrying a small amount of profit as we speak. And again, no significant change. It is just the nature of the market. We're not going to be winning all the time. Our job when we're not winning is to not lose too much and wait for the good opportunities to come, which they will. The short-term ledger also very slightly down. We lost about 2% in trading throughout the week. Only one trade was a winner. Another trade was essentially at break even, and two trades did lose. So really, one of those trades represents the loss we took for the week. Again, not a big one. It is what it is. Notes and opportunities for improvement. We saw another ultimately flat but bouncy week. Very light trading. We do have to trade. That's what we are, traders. So we will continue trading, but we're essentially waiting for the bigger market moves to come. We do have pending orders in place for when that market does start moving. Economies are starting to consider a second shutdown right now as virus cases spike after most of the global economy starting to cautiously reopen. And of course, in the US, we had the riots and protests, which we're still having. And it looks like nobody considered the fact that a lot of people crowding together and rioting was probably going to spike the virus cases. So I'm blaming most of the spike on the rioters here in the US. But again, nobody seems to be taking that into account or acting in any logical fashion. So we'll see what happens. The American citizenship, however, is very, very at the end of the rope, I should say. And I'm not sure a second shutdown is going to be possible without just civil disobedience across the board. Here in Pennsylvania, I see places where masks are technically required, such as shops, and people are walking around without masks. The management of the stores is also sympathetic and is doing anything about it. So we are seeing civil disobedience. It looks like the full story of the virus does not make sense to everybody the way it's being spun. Like, you can't have more than 10 people in a store or very bad things will happen. But on the other hand, sure, you can have thousands of people rioting in the streets and that's okay. So again, there doesn't seem to be a whole lot of logic behind all this. And I'm not going to pick a side. I'm not going to say who's right or wrong here. I'm just going to say it doesn't make sense. And when things don't make sense, the people will start getting riled up. Oil continues to recover, and we'll look at that chart very shortly. Silver as well, and gold. Silver is at very close to 5-year highs. It's lacking $1 or $2 to break the 5-year high. The all-time high of silver was somewhere in the 40s, so we're not even halfway there, but you have to go back 10 years to see that. Gold, however, is very close to its all-time high, so gold is also doing quite well. And what this tells us when something is close to an all-time high or a multi-year high is that it's on the brink. If it bursts through that level of resistance, it's going to burst through with a lot of strength. So we have to be ready for that. Our live event is at this point tentatively rescheduled. I'm looking at having the event in the same place I was originally going to have it, Wilkes-Barre, Pennsylvania, September 30th, October 1st, and October 2nd of 2020. I picked those dates for multiple reasons. One, because they were available at the venue and it's far enough away. It's 3 months away, which should allow for things to quiet down. Of course, anybody planning on coming will have to be very tuned into the news and any restrictions, especially if you're coming from outside the country. I don't know if there's going to be any quarantines in effect or anything like that. And of course, I will post information as I get it. I will be updating the website very soon, and you'll see all the details there. The other reason I picked that date, and the same reason I picked the prior dates at the end of April, is that I do want to catch a significant fundamental announcement during our 3-day seminar. And in both cases, in the April one that had to be canceled and this new one, or this rescheduled one being planned, we're looking at the non-farm payroll as being the fundamental to be traded on Friday of that week. The dates are Wednesday, Thursday, Friday. So again, if you need more information, do email me and stay tuned to the website. I'll be updating everything there in the next few days. Relative strength meter, and you'll notice that this has been changed. The website where I was getting my data, it was Owanda. I've never made a secret of that. They have removed the strength meter. I don't know if this is temporary. It's going to be permanent, but I had to look for an alternate source, and I got this from FX Street, if I'm not mistaken. And it's not in a format that I really like. I really like the one that we had before, but if you look at the right-hand side of the chart, you will see the monthly and the weekly, and you can see which ones were the big movers. So we can see that the Aussie continue to make good inroads on the monthly. We have Aussie CAD, Aussie JPY, dollar, all of them gaining. Kiwi dollar also rose on the monthly, and the losers were USD Swiss and silver to some degree. Very slightly, nothing else majorly colored on the monthly. On the weekly, we saw gains on the Aussie CAD, Aussie JPY, Aussie dollar, Euro CAD, Euro pound, Euro JPY, Kiwi dollar, USD CAD, and gold. So all of these went up, and the one major, I guess, negative, and it wasn't a huge negative, was the USD Swiss. All the other columns you can ignore. They're daily, 4 hours, 1 hour, 30 minutes, down to 1 minute. Again, I don't like this chart because it has a lot of information that I don't need, but it is what it is. So I'll be using this one till I find an alternative. Fundamental announcements for this upcoming week. We have Fed Chair Powell testifying at 10 a.m. on Tuesday. I'm not sure how long this is going to be. I'll probably tune in and watch it and open up the trading room and see if there's anything tradable happening. So I don't think there will be, but why not? So I'll be there for that event. On Wednesday, we have the FOMC minutes being released at 2 p.m. So we'll have an earlier than usual afternoon session. And on Thursday, we're going to have the non-farm payrolls. This is usually on Friday, but we're coming into the Independence Day weekend here in the U.S., July 4th weekend. And I guess they moved it up a day to account for that. So I'm going to guess that the markets are either going to be closed or people starting to tune out or whatever on Friday, so it got bumped up by a day. So we will be trading the last two of these events, FOMC minutes and non-farm payroll, actively. We'll be here for the Fed Chair Powell testifying on Tuesday. But in advance, I will say I don't have a whole lot of hopes that will result in anything productive, but might as well be there. Commodities, we have oil on screen. And again, I had some problems with where I was getting my charts for oil. So this is an alternative, but we can see very clearly, and this chart is exponential. So you have to account for that as well. But we can see that the recovery in oil from close to zero up to $40 in the space of a couple of months has been dramatic. Of course, we knew it couldn't stay as low as it had been, but it is slowly making its way back towards the top and not giving up much ground as it does so. So we've got a very bullish sentiment backing oil right now, which of course to some degree will give strength to the Canadian dollar, not as much as historically. They've been rather disconnected, but still this is what's happening and should be taken into account. With that, we move into the currencies. Euro dollar, a basically flat week with rather wide range of about 150 to 200 pips. It did bounce between resistance and support quite nicely. So we're still waiting for a breakout in either direction. However, it's still very close to the top of the chart, which means it's going to be stressed. And if it does break the top, it will probably do so with significant violence or strength. So take that into account. The dollar, of course, is facing a lot of issues. And for once in quite a few years, the euro seems to be better positioned. So I am bullish on this chart very cautiously, but I will take breakouts in either direction. Moving on to our pound dollar, it is testing support. So it hit a high a few weeks back and has been dwindling down very slowly, very bouncy, but still moving in general down. The week itself was flat. It went up and then it went down, ending the week pretty much where it had started. And we're still waiting for a breakout in either direction. USD/JPY also very flat, a little bit of an attempt to break out towards the bottom, which quickly failed, and it bounced back above resistance, now support, and it has stayed there. In the grand scheme of things, hasn't moved much in quite a while, and it is very uncertain. I'm not sure why the yen is facing headwinds so strongly of late. It's still gaining strength, of course. It's still near the bottom of its most recent movement, but I would have expected it to go much deeper, and it hasn't. So bears watching, and we'll see if we get a good breakout at some point. USD Canadian is now following a very nice trend line down. It is retracing towards that trend line after a dramatic drop. In general, the week was flat with a bit of a bullish flavor to it. It did break out towards the top, ended up the week at a prior high, and it is now at the bottom part near the apex of a wedge. So we're waiting for the breakout again in either direction. My bias would be bearish on the USD CAD, but again, we'll have to see which way it actually ends up moving. USD Swiss, also a very nice drop towards support in the past month or two, and now it is bouncing between new levels of resistance and, of course, retesting support a few times along the way. And I expect for the bottom drop hat, but it has been really so again, waiting for a breakout to see which way we trade it. Aussie dollar very near the top, and this is the classic example of what I meant with a stress pair. We have the dollar losing strength, the Aussie gaining strength, but it is at a crossroads. It's very near prior highs, long-time highs, and if it does break out towards the top, it will probably do so violently, but at the same time, it's been very reluctant to do so, and as reluctant to go down. So trapped in the sideways channel, with a little bit of width. It's got like 200 pips in that channel, and it is staying more towards the bottom of it than the top, but still, in the grand scheme of things, you look at the chart, this thing is just hovering at the top, and trying to break out above, just not able to yet. But at the slightest hint of bad news for the dollar or good news for the Aussie or a combination, we would see this thing rocket up, and we better be there when it happens. We already have pending orders in place to take us in if and when that happens. Kiwi dollar, same thing, but not as near the top as the Aussie dollar, but still we can see that bullish sentiment, and then suddenly it went sideways at its current high. So we're waiting for a breakout. We're trading this one down because the bias has been decidedly towards the dollar in the last few weeks. We're carrying a bit of profit on the one open trade, but I'm just as I guess willing to give that trade up if I do see that sentiment changing. Aussie Canadian, another one living at the top of the chart. We're waiting for either breakout or a correction back towards underlying levels of support. So we've got trades open actually towards the bottom. On the long-term account, we have one trade open because I do expect a correction, even if ultimately it does end up going above resistance at the top of the chart. So we'll see. Euro Swiss, a very volatile pair in the last month or two. It did an absolutely fantastic breakout towards the top, and then it just fizzled out. And it's now looking like it's testing support. It may even go all the way back to the bottom. We took some nice profit along the way on some of these movements. Right now, I'm cautiously waiting for breakouts to start happening. Euro pound is now officially heading up. So we've got a bullish breakout. It has broken resistance. It is very near the top of the Ichimoku cloud, which is now acting as support since it has managed to cross it. We'll have to see if it's going to go all the way to the top or we're going to get trapped in another one of these sideways patterns. So another chart that's basically a waiting game. Euro JPY, it broke the top of the chart quite a while back, making a new high, and then just as quickly collapsed back down to support and is now sort of sideways, sort of bullish, sort of trying to make its way back up. So again, too soon to tell which way it's going to break. I am a yen bull, so I think the yen is going to be gaining strength at some point in the next week, month, quarter, I don't know, but at some point we're going to see a trip towards the bottom on this chart on yen strength or euro weakness or a combination. So I'm waiting for that, but if it does keep going up, breaking resistance, I'll just as happily trade it up. Euro Canadian, this is the technical example of a sideways chart. So it has been bouncing between resistance at the 154.50 and support at the 150.50, and that is a 400 pip channel for quite a while. It's broken multiple trend lines along the way, but always on sideways action. And I have even started trading the channel bounces here since it's become so predictable. At some point, of course, it's going to break out, and then we'll probably be carried along with it. But for now, it is and remains sideways. Pound JPY, good attempt at a breakout towards the top a couple 3 weeks back, and then it just returned all the way to the bottom of its previous channel where it remains right now. So it is testing support. We'll have to see if we get a good movement in either direction. I'm agnostic on this one. I don't care which way it goes, but when we see it happening, we will be taking that trade. Aussie JPY, another one that is lingering at the top, but has been showing a bit more weakness than other Aussie pairs. It has broken the most recent outer trend line and is going sideways, but it does seem to be lacking in any sort of consistent movement towards the top now for a few weeks. So I am looking at this one possibly doing a correction or a test of support, and we'll be ready for that. Well, I think we already have pending orders as well. Euro New Zealand is a very volatile pair. Some of these movements, they look small on the chart, but they're 500, 600 pips in width, and has been sideways. It actually looks like a fishbone. You can see the spines to either side of these candles. So it has been going in both directions, but never going too far above the 175.50 and not going below the 173. So in essence, we have a, what is that, 350 pip channel, and it's mostly staying towards the top of that channel. Right now, it's very near the top, so we may attempt to trade it down if we see a good opportunity. And of course, if it doesn't break out towards the top, we will be trading that as well. Pound Canadian, and we traded this one successfully, I think, recently, either up or down. I don't keep tabs in my head. That's what the ledgers are for. But it is in a wedge. You know, we are waiting for a breakout in either direction. My bias, I guess, is bearish. I think it will break the wedge towards the bottom and give us a test of support in the low 160s. But of course, if it breaks out in the opposite direction, I'll be just as happy to take that trade. And last but not least, our pound Swiss. And I think we took some profit on this one at some point as well. I forget, but it's testing support at the 116.50. And we're waiting to see if that support holds, in which case I'll probably buy, because this is another pretty clear sideways channel. So we might want to try to trade it back up to the 120.50 for about 400 pips of profit. A little bit less because I want to see it moving before we jump in. Or if we get a break of support, I'm just as happily trade it down for about the same amount, 400 pips towards the bottom of the chart. Either way, we'll see what happens in the next week or so and act accordingly. And that is the end of our charts for the week. Our setups that I see in progress right now hasn't really changed. The coronavirus is the main factor, the main variable right now across all the currencies. The UK, of course, is highly flavored with Brexit. We're in the middle of trade deals that need to be finalized by the end of the year for a clean Brexit to actually happen, and it's not going to happen. In particular, Japan is being very difficult because Japan feels betrayed. They invested heavily in the UK back in the 80s. On the basis that the UK was going to be their gateway into the EU, and it was for a long time. The Japanese built factories and invested in the UK and all this and that, and that. They're now pulling out. They definitely feel betrayed, and now that the UK is coming hand in hand asking for a good trade deal, they're not going to get it. In the US, of course, same coronavirus, but the economy is also pretty much in recession. Plus, we have the civil unrest with the riots continuing, and this is an election year. So it's sort of like the perfect storm, yet the dollar continues to maintain, in general, a high degree of strength. I think at some point that's going to change, but for now, well, we trade whatever the market's doing, not what we think it should be doing. Australia has had a lot of positive outlooks come out recently, that the coronavirus impact is not as bad as in other places, that the economy is actually poised to grow if mistakes are made by their leadership, this, that, and the other. And that has given the Australian dollar quite a boost. And again, you saw this in the charts, that most of the Australian peers are very near, if not at the top of their chart. So we're looking to see if that continues, in which case we'll see higher highs, eminently tradable, or if we see some corrections happening. Japan, not much to say other than that I don't understand why it hasn't strengthened more, why the yen hasn't gained more strength. Of course, as with everybody else, coronavirus impact, but the impact in Japan seems to be very minor. And definitely not long lasting. So we'll have to see which way the yen bounces. But I do see strength for the yen in upcoming time periods, weeks, months, whatever. And of course, the euro pairs remain vulnerable to coronavirus, especially as a lot of the global economies are looking at the possibility of another shutdown as new coronavirus cases start popping up. And of course, they're being blamed on reopening these economies too soon. And of course, we had that stimulus package that the European government released or informed us about a few weeks back, which was very well received by the market. So again, the euro is looking good. It's basically gaining strength, but we'll have to see again if this is going to be something that lasts more than a month or so. And that's it. My final words here. I wanted to touch upon really technicals here, as well as a little bit of philosophy. I've always said that I don't trust dead Italians, and really I was being a little bit facetious, but mainly it was aimed at Fibonacci. Anybody who's been trading for a while is familiar with the Fibonacci expansions and retracements, which give us a guide, or they're supposed to give us a guide as to how far price action is going to move correctively or as a continuation when these price movements happen. And you look at the charts and you apply the Fibonacci to them, and they do pan out quite a lot of the time. But here's the thing. I'm not saying they don't work. They probably do to some degree or more often than not. What I'm saying is that I don't need them. I stopped using them a long time ago because if I am long on a pair and it's going up, I'm going to keep going with that for as long as it keeps moving in my favor. I'm not going to get out just because Fibonacci, the dead Italian in this case, tells me that we're reaching the end of the expansion. I've seen many cases, and this is why I stopped using Fibonacci, where I would have gotten out at a certain point and missed out on hundreds of pips of movement for getting out too early. And same applies in the opposite direction, of course. So I abandoned Fibonacci. I won't even use it part of the time to gauge anything. I just don't use it at all. And I tell people when they ask me why I don't use Fibonacci that I really don't care about dead Italians. However, there's another dead Italian called Pareto, and the guy was brilliant. And what he discovered was a rule that's now known as the 80-20 rule, sometimes the 90-10 rule. And what it says is that 80% of your results often come from 20% of your activities. He tried it out in his garden with, I think, peas, and he discovered that 20% of his pea plants were responsible for 80% of the harvest of peas that he had. The other 80% of the plants were either non-starters, didn't produce a whole lot, or maybe didn't produce nothing. And again, sometimes it's 90% of your profit comes from 10% of your activities. So that is known as the Pareto principle. It's applied in everything. If you look at a business and you analyze it, it pretty much comes out that 20% of your customers are responsible for 80% of your revenue. 20% of your employees are responsible for 80% of your good results. And again, that applies just across the board. And in trading specifically, it's what's allowed me to weather the drawdowns. Back when I started, whenever I had a losing period, I was almost ashamed. Hey, I'm supposed to be a master trader. How can I be losing? Well, I soon had to admit to myself that this is the way it works. And in my case, and you guys have access to my ledgers, I can easily prove that 20% of my trades, sometimes 10% of my trades, are responsible for the bulk of my profit. If you remove that small number of trades, relative small number of trades, you would remove my entire profits for the year. The other 80% of my trades are going to either lose a little or come out break even or win a little, but they're not going to be anything that really moves the needle. However, I can't eliminate these trades the way I can eliminate the 80% of my customers that are giving me headaches and not revenue. In trading, I cannot eliminate the 80% because I can't know ahead of time. I can't do an analysis and say, well, these are the 80%, just don't get into that trade. So I have to get into all of them. But at the end of the day, what that means, and of course I get out of them as quick as I can, what that means is that for time, I'm probably going to be stuck trading the 80% of the trades that aren't going to do a whole lot. It's only for very small periods of time, a fifth of the time, that I'm going to be having some spectacular trading, which is going to move the needle. It's going to make my account to 100% as we did last year. Sometimes I actually do a little bit more, but I never know when that's going to happen. Is it January, February, March, June, August, October? No idea. So I just have to keep trading every day with the realization that 80% of the time I'm pretty much fiddling with my thumbs and not gaining a whole lot. I may even be losing money some of the time. But the other 20% of the time, where again I don't know when that is when we're going to get our stellar results. So if you do have to follow a dead Italian, make sure you know which dead Italian to follow. And that is the end of my spiel for the week. Any comments or questions from anyone? Okay, and I wish you guys a rest of a great weekend, and we will be back tomorrow. I'll be sending out an email summary, and for those of you who are not subscribers, of course, you will find this on YouTube. Indeed, you're listening to me on YouTube if that's the case. Thank you so much. Have a good one.